is Avijit Chatterjee recording our weekly session of Chartsarefun. This is for the first full week of January, the week of January 5th, recording this on Sunday, January 11th in the evening. First of all, our website for our blog, chartsarefun.substack.com. We appreciate you subscribing to it. And if you send us your email or just subscribe to your email, we'll get the blogs as soon as they get published around 7 a.m. Our YouTube site is also Chartsarefun. Appreciate you subscribing to the channel. And if you like the videos, appreciating hitting the like button. Today, we're going to talk straight with the market is sending mixed signals. On one hand, starting off with the small caps, we can see a clear breakout. We can see that there was a 4.6% move this week in small caps. We can see that it broke out to higher highs. And key is, we've talked about this in the past. If you really go back and look at 228, 225 as the neckline, we see a left shoulder at 211, a right shoulder at 211, and the head at 170. So that's an inverse head and shoulder on the weekly chart of IWM, the Russell 2000 ETF. And so if you take the depth of the head from the neckline, 170 to 225 is $55. Add 55 to 225, that's a 280 target. We're getting there. We are almost at 260. So 280 is 20 points more. It's not like a big target to reach. It's very good likelihood that that's where small cap is headed, and we might be there in the next couple of weeks, given the momentum that we're already seeing. Another key level we are watching is the Dow Jones Industrial. This is kind of a mega cap. Of course, a big part of it is 30 broad industries that are in it. And with the financials reporting earnings in the next week, key is this level is also kind of an inverse head and shoulder, but more of a cup and handle or an ascending triangle. We can see that the 45,000 level, 45,100, 45,100, and the 45,000 here from where the breakout came. So a 36.6 to a 45,000, we're talking about 8,400. 8,400 added to 45,000 is where the target on this Dow Jones Industrial is, and that's 53,400. We had a nice 2.3% move this week, also broke out to new highs, and we are already at 49,500. So 49,500 to 53,400, we're talking about another less than 4,000, 3,900 points or 3,800 points. So that's not too far from where we are. I mean, we could easily get there with the momentum in the Dow Jones Industrials. And there are several banks. Goldman Sachs is in there, JP Morgan Chase is in there in the Dow Jones Industrial. These are the 30 well-diversified large companies in the New York Stock Exchange and in Nasdaq. It's a combined index, and it's price weighted. So companies like Goldman Sachs can help the index move quite a bit higher. So it's going to be interesting to see how this index behaves. But with the breakout to higher highs, a nice bullish beginning of the year, it seems poised for additional upside. Another key barometer of, call it the Dow Jones, often they call the Dow Theory. When the transportation breaks out to new highs with the Dow Jones Industrial, that's often considered as a bullish sign. And if you look at transportation, that's up 3.7% the first week of January. That also has a very nice kind of a cup and handle breakout. So from 12,400 to 16,400, you're talking about 4,000 points. Add 4,000 to 16,400, you're talking about 20,400. We are getting there. We are at 18,100. So another, call it 2,300 or so, 2,200 points is what this could climb to get us to that 20,400 or 20,500 target. So that's a possibility. That's where the transportation index, and which is often a barometer of the broader economy. Transportation is all about railroads. It's about trucks. It's about airlines. It's about FedEx, the big UPS, the big transportation companies, the airlines. They're all in the transportation. The fact that the economy seems to be holding strong is an indication that the transportation is breaking out to higher highs. We can see that it took some time. It was a laggard for most of the year till up to November. We did have the pullback in November. From there, it just broke out. The month of December was very bullish for the transportation index. It finally took out the highs of last year. from the December timeframe of 17,800, and since then has broken out to higher highs. So this seems poised for additional upside. This cup and handle again from 12,400 to 16,400. Those 4,000 points stacked down to 16,495 is very much poised for 20,400, 20,500 level. Another key industry that is a sector that is doing very well is industrials, and that also shows broader strength in the economy. This one at a 141 fell to 111, went up to 140. If we just hover over it, that's about 144. So 111 to 144, we're talking about $33. At 33 to 144, you're talking about 177. We're at 161.93, so 162. So 162 to 177 is another 15 points or so, or $15, and that could easily happen if the rest of the indices are climbing, as we said. So that also looks bullish. And now with the financials, with the banks about to announce earnings next week, all the big banks, Citibank, JP Morgan, Wells Fargo, Bank of America, all their earnings are expected next week, and so are the Wall Street banks, the Morgan Stanleys and the Goldman Sachs. And this also is poised for more upside because you can see a 51 down to 41 and up towards the 51 level or so. So 41 to 51, you're talking about $10. At $10 to 51, that's 60 to 61 is where that's headed. And we recently saw a level at 56.5. So if the momentum is strong out of earnings next week in financials, expect additional climb towards that 60-61 level, which is the XLF target, which is the financial sector ETF, the SPDR financial sector ETF. So that also looks bullish. Another key that we often talk about is crypto. And to us, crypto is poised for a breakout above 95,000. What we are seeing is after that low in November, where it pulled down to 80,600, it is forming a nice base between 80,600 to 94,600 to a higher high at 94,800. So take that 80,000 to 94,800, you're talking about 14,200 points. At 14,200 points to 94.8, that's 109,000. Why is 109,000 important? Look at this is the daily chart of Bitcoin. We can see that it pulled back. It tested that 50 period moving average, which finally is now beginning to turn higher. There's a lot of skepticism on cryptos. We're hearing people putting in target that's going to break 80,000, head down to the 70s, and retest that key 74,000 that we saw on the April low of 2025. So there are many that are looking for that. But if you look at a little up stretched out on the longer term, this is the weekly chart. What you could be effectively saying is, well, this has tested a key neckline in the 75 to 80,000, and from there this rebound to that 109 level, as we see here, that's the left shoulder. The head formed from 76 to 126. Now we got an 80,000 test and a rebound, so another 109 can't be ruled out. Now, if you look at the 50-week moving average, that's at 101. But breaking that higher, testing that 109, and then maybe if it does break down, if that's what the bears would want it to happen, then that would be a head and shoulder breakdown. A right shoulder matching the left shoulder at 109. That break below 80, a break below 80 from 126, you're talking about roughly 46,000. Subtracted from 80, that's about lot lower, 34,000. Now, are we going to get that low? Probably not. But even if you look at the long-term 50 at the 200-week moving average, that's at 57,000. Not quite sure if a head and shoulder breakdown will really pan out. We might get a lower low from an 80,000, but before that, a good chance of a climb to 109 is possible if we're looking at rest of the like the small caps climbing to IWM to 270, the Dow Jones Industrial Index climbing to 53,400, transportation climbing to 20,500. If all those things have to pan out, they could very much see in the next few weeks more upside in Bitcoin. That's very much possible. And the cryptos, the alts as well, the Ethereums, the Solana, and the XRP is quite possible. Now, kind of a warning sign in Barron's was about a lot of people are talking about the AI bubble. In fact, in CNBC, people have now said that there's so much of saturation of the bubble talk that maybe we have a bubble in the bubble talk, as many are saying that. That said, there's a Barron's article saying that how do you beat the bubble if there is such a bubble in the AI space and we get a sharp pullback? So there are some people who are poised, who are explaining that they would diversify out of AI, and some warning signs are there. The market is giving us some warning signs. One particular warning sign is a semiconductor SOX. This is a semiconductor Philadelphia index. What you see here is a classic bearish rising wedge. Rising wedge because if we join the highs and the lows, that's narrowing down to an apex. This is kind of narrowing down in what we call as a rising wedge pattern. And as that is forming, RSI is not forming higher highs. RSI is weakening, MACD is weakening. So that's something to watch. If this will break down, that shows weakness in a leading sector that has been, helped the climb in the markets for most of 2025. You can see that from 33.88, it has climbed up to 74.90, right? So that's more than a double, a big move in the semiconductor index. But this kind of a bearish rising wedge is a concern. Another key thing to look at is the QQQ juniors. These are from so take the top 100 Nasdaq stocks. Those are top 100 market cap Nasdaq stocks, and those are in QQQ. And then take the 101 to the next 100, as in 101 to up to 100 stocks. Those are in the juniors, or the Nextgen 100 ETF, as they call it. That is forming what we call as a bearish, ominous, bearish looking broadening top pattern. So you can see as you join the highs and as you join the lows, this could mean a breakdown of a bearish broadening top would typically mean that the breakdown could bring us back to the bottom, and we can see that trend line is coinciding very close to where the 200-day moving average is at 33.4. So that's a possibility that we could be signaling in the technology-heavy Nasdaq index, the QQQ juniors in particular, showing a broadening top formation, which is an ominous-looking bearish sign, and the semiconductor ETF, and not the ETF in this case. ETF also has a similar-looking chart, which is SMH, but the semiconductor index showing a bearish rising wedge. So with that, it's a word of caution. That's why we started off saying it's a bit of a mixed market. Some strong strength in the transport, some strength in the small caps, so broadening out, but from the key heavy technology related stocks in the semiconductor index and in the QQQJ, we could be a bit cautious on that front. So with that, let's sum it up. We're talking about the small cap index breaking out the first week of the year in a strong fashion, up 4.6% out of the gate. Looks for more additional upside. That 225 to 170 is a $55 level to add to the 225. That gets us to 280. So that's where we think the inverse head and shoulder target on the IWM is. The Dow Jones Industrial Index has a nice ascending triangle breakout about 45,000. From 36.6 to 45, we're talking about 8,400. At 8,400 to the 45,000 level, that's 53,400. We're at 49,500. You're talking about little less than, 4,000 or so level for it to climb to get to that 53,400 levels. That's where we think the Dow Jones Industrial is headed. Transportation had a beautiful cup and handle breakout above 16,495. So that's 12,470 to 16,495. That adds up about 4,000 points to 16,495. You're talking about 20,495, 20,500 is where we think the transportation index is headed. The industrial sector ETF XLI has a beautiful breakout. It has been poised to climb higher highs. It also had a nice 2.5% climb in the first week of the year. That upside from 111 to 144, we're talking about $33 added to 144. 177 is where we're headed. We are 162, not too far, within 15 points or so of that target. XLF, the financials, has more upside from a 41 to 51, $10 added to 51, 61 where it's headed. It tested a 56.5 and pulled back. Earnings is next week. Potentially, it's possible that the financials could climb another 10% or so and get to that 61 level. Bitcoin, we believe, is basing out. It's tested a low near 80,600 in November. From there, a nice base is forming between 80,600 to 94,000 to 95,000 on the top end. That breakout from 94,800 from an 80,600 is 14,200 added to 94,800. We're talking about 109,000 to be exact. So that's a possibility. The weekly chart shows kind of an head and shoulder pattern forming where the right shoulder could match the left shoulder at 109. So we are expecting that upside counter trend move from the 80,600 towards the 109. And that could pan out with the upside that we talked about in the Dow Jones Industrials with the small caps, with the transportation index and so on. So we could see the cryptos get a nice bid in the next few weeks and get to that level. So this is all pointing to some upside for the next few weeks. And then maybe around the February timeframe or so, we could get to those levels and then be careful about some sort of a pullback. And that sets us up to this Barron's article about the AI bubble. And we are seeing some weakening signs already in the AI related stocks, starting with the infra stocks in the semiconductors. We can see a bearish rising wedge pattern. That often means it breaks down and comes back and tests the bottom of the wedge at 61,000. 6,160 level is where this could come down to test. So that's something that's bearish looking. And then the QQQ juniors, which is the next gen 100, also in the Nasdaq market cap from 101 to 200. The second 100 stocks, the first 100 stocks are in QQQ, and the next 100 stocks from 101 to 200 are in QQQJ, and that's forming a broadening top pattern, a very ominous looking broadening top pattern where the pullback could take it down all the way to 33.4, which is where the trend line meets the 200 period moving average. Good luck investing, folks. We do have a mixed market, but looks like it's bullishly aligned. And we did have the Supreme Court decision that was pushed out. They did not announce the decision, which is bullish in the market. Market was concerned about the tariff-related decision. And the job data was not as strong as expected. There was expectation of 60,000 job came in at 50,000. The previous month was at 56,000, so 6,000 lesser jobs in December. The unemployment did come down, which is a good sign from 4.6 to 4.4, but still it's hovering in the 4.4 level, which is not like very hot, very cold kind of situation. And this could put the Fed on hold, but then the chance of rate cuts could be very much in the picture because employment is not really doing that great. So with only 50,000 jobs added in December, there is weakness in the labor market for sure. That good luck investing, folks. We'll talk to you next week. Thank you.